Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. We're entering the second week of September, and so far we've survived that first week. September is notoriously supposed to be a terrible month for the markets, but as I always say, let price and volume guide you, not some market trivia. So anyways, as the markets continue here right now, we basically have sort of the story, a tale of two markets. And what I mean by that is we look at the S&P 500, the Dow Jones Industrial, they're still correcting. They're not looking that good, although this morning they're trying to rally. You know, we're still higher than the August 28 lows set on the S&P 500. However, the S&P is still below its 50-day moving average, and perhaps it's reclaiming it this morning right as we speak. But if you look at the NASDAQ, that's another story. It's just a few points off its all-time highs. And if it can take out this high, well, we can easily say this market's in a new uptrend. The NASDAQ 100 trading at new all-time highs this morning. They tried to take out that high on Friday, just missed it, came in a little bit. We're above that today. We'll see if that can sustain that. Now, what I mean, a tale of two markets also is the leading stocks are not getting crushed at all. There's a handful of stocks that continue to move higher and ignore what the general indices are doing. For instance, we look at the Chinese stocks, they're doing very well, and a lot of those are internet related, and that's same with the US internet stocks, those are doing very well. Biotech stocks, large cap and small cap. There's so many of these stocks that are breaking out to new highs and just continue to power higher. It's even hard to keep track of all of them. In the auto sectors, we have stocks doing very well there as well. Software doing very well. And then some of the stocks we'll talk about too is in the leisure gaming, gambling business that are doing very well also. Okay, and before we get into that, I just want to mention one more thing. Sectors that are suffering in the S&P 500 still are financials, which is an important sector. We want this to be a broad-based rally. We do want them to participate in this rally. And same with the home builders. They're still near their lows. Looks like they caught some support, but still haven't bounced off of there. So we have the technology space doing very well and the healthcare space. Okay, so moving forward, let's talk about the gaming stocks. As a group, stocks like Las Vegas Sands, Wynn, MGM, Melco Crown, all these stocks have moved as a group to about the number 7 spot in terms of industry groups out of 197 industry groups tracked by Investors Business Daily. So one of the stocks I want to focus on today is Las Vegas Sands. Pretty much having a turnaround, and it's not really due to the revenues they're experiencing in Las Vegas, but more in Macau, China that is, and they own the most property in that region, and that region is experiencing some really good growth now. And perhaps that may be due to the fact that China's starting to do a lot better than people expected. Last night, the Chinese markets did very well. If you look at the FXI, it's approaching a double bottom buy point, so that's something to consider as well. So getting back to Las Vegas Sands, over the last 3 quarters, earnings went from minus 5% to positive 1% to stunning 48% last quarter. This got the stock moving. Revenues have been steady in the 20% range. Last quarter, they came in at 26%. So going forward, Las Vegas Sands has basically been almost in a 2-year consolidation. It had a climax top back in December or November of 2010. Tried to make a new high at about $60 in March. It came down from there. And just recently, the chart tightened up a lot, and here's why I like it. So in May, it went up to about $60.50. It corrected down below $50. We saw a lot of support there, and basically now it's been moving up. Earlier last week on Tuesday, it broke past the $58 buy point, followed through in volume on Wednesday as well, and moved a little bit higher. This morning, again, it's powering higher. So if you didn't buy it at the $58 level, your alternative buy point right here is at about $60.50. And of course, if the stock fails down below $55, it might not be the right time for this stock. But the stock is moving well. The company it's in is doing very well. Gaming revenues are increasing severely in Macau as the Chinese economy is experiencing a little bit of resurgence. So as always, let price and volume be your guide. It is more of a market of stocks than a stock market. So don't let the market correction keep you out of the market if you see good opportunities, because they're out there in the Chinese stocks, biotech, internet stocks. And for full disclosure, I do own Las Vegas Sands. I was picking up last week and might be looking up to pick up some more of it now. So as always, let price and volume be your guide. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Thank you.